All right, hey everyone, welcome back to the Financial Summit. Oh, oh no, I did do it right. The Summit YouTube stream, I think I screwed up. Shit. See, this is why I'm not supposed to be doing tech. Um, we're not streaming to the right link. Fuck me. Um, hold on. No, we are streaming to the right link. It's the
Okay,
right link I tweeted out, and
we can ask Mel. She knows everything.
well, we got people watching. I forgot to do something in Zoom, and rushing to set this up. And it didn't. Are we working? Is it accurate? Like, are me and Mark on? Are we live? Like, I'm actually not sure because I screwed up the
Let me see.
the stream. Okay, people are saying stream's working fine. Okay, so we'll let it be then because I definitely forgot to do one thing on the on the Zoom setup. All right, it works. Um,
I see it.
okay, welcome back to a technical analysis deep dive with Mark Wood. Mark, how are you doing this week?
Doing excellent. Hanging out in Florida. It's getting a little bit hot, but not hot enough to kick me out yet. Lingering around the 95, 100% humidity. It's right. That's right in my wheelhouse growing up here.
All right, we're gonna dive right into the charts. Bitcoin is falling. I'm actually super disappointed. I'm not gonna say it's unreasonably frustrating. It's insanely disappointing and actually kind of scary. It's really scary when the ETFs buy 25,000 Bitcoin in a single week and the price moves up $3,000 and then they sell 3,000 Bitcoin and the price crashes $5,000. This is a recipe for a total disaster to where we can wake up tomorrow and Bitcoin is at $28,000 from just the round ball math. And I know everyone is like has their conspiracy theories up that the futures markets are manipulating the price and Wall Street is trying to, get them on the cheap. Shitcoiners are trying to explain why this is why Bitcoin is the government coin and their shitcoin, which has, three people using it, is the future, where if it was anywhere remotely to Bitcoin, it would be like this, but 10 times worse and easier to manipulate, which they don't seem to comprehend. What is your overall view before we go to the charts? Are you as concerned as I am? Now, the technical picture right now does not look bad, but this dynamic that how in the world is Bitcoin still under 80,000 when the ETFs buy 25,000 Bitcoin in a week when there is already supposed to be a bit of a shortage? Um, where 3 months post halving, well, maybe two, April, May, June, 2 months post halving. I know cycle wise we're okay, but man, even like the last 24 hours, we're back to 70K, and then someone sneezes and we're down $4,000. It 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 doesn't make sense to me. Make it make sense, Mark.
All right, I'm actually not as concerned as you seem to be yet. Only because so far, outside of traveling to the prior all-time high way earlier than ever in history, still not out of bounds in anything to anticipate post-halving. When we cover the first post-halving trends, and I can pull that up and find it somewhere, we can see anywhere between 45 and 90 days of consolidation post-halving prior to prior to getting back to anything remotely bullish. And we're, like you said, we're maybe 50 days out. In fact, I'll show you one thing. There's a couple things actually I can show you. I still believe firmly, until shown otherwise, that we're very similar to 2017. It looks very, very similar to 2017. And I just got a strong signal that actually will confirm on this weekly close to help justify that premise or that theory. I can show you that if you want. But
No, I mean, look, Mark, this is your show, right? It's not what
yeah.
I want. It's what you want to show the audience. So just go for it if you think it's relevant.
So I do understand what you're saying. I have read, I have, from what it sounds like, it seems like most of the miners are out, except for what they might be producing, which is next to nothing. But there is still some sell pressure coming from the miners. I think I read maybe they were selling 3,000, or at least um, one mining pool was selling maybe 3,000 Bitcoin to offset some of the purchases. And there was one other reasoning or rationale I read that kind of made sense to me. But honestly, that's not my concern. My concern is when is retail? When are my friends gonna say, hey, maybe I need to buy a little bit? And I don't. I'm not sure that is going to happen. Quite honestly, I mean I do have a couple of friends that jumped in like pretty heavily, 40 to 60K. They have understood what's going on. But I think that the price, when they're seeing the price at 70,000 or 80,000, so many people still have it in their minds that they don't know they can buy 1/10 of one Bitcoin or 1/5 of one Bitcoin.
My bigger issue on that front is I don't think those friends are ever getting in. I think it's too late. I think the only people that are getting in are people that have less than $5,000 to invest in Bitcoin. I think anyone that has, uh, let's say, 100 grand right now, I think that person is too scared. And when Bitcoin is above 100 grand, that person will just say it's too late. I don't see the middle class income person rushing into Bitcoin right now for an investment. I think that person is probably going to wait till the next bear market. And I think that person would rather buy at 100,000 after it falls from 200,000 than buy right now.
Yeah, so but I've had a theory that it, larger money isn't actually going to get remotely interested, until the price is at, let's say, 100 to 250,000. And I think a big part of that is going to come from real estate investors, who are used to dealing in hundreds of thousands and millions of dollars. And I saw a video on Twitter yesterday. This guy had a friend who was telling him, listen, don't buy this place you're looking to buy. Just whatever. He was going to sell a property and he had $500,000 to deal with, and he was going to put that towards another property. And his friend was saying, don't do that, just buy the Bitcoin. So this guy did a cost analysis and realized he lost the potential $3.5 million just by not taking his friend's advice and just buying Bitcoin at the time. I don't remember what the price was, but I really do believe. Look, we had $1.3 trillion is in the market cap. That is pennies. It's a drop in the bucket compared to the trillions that are out there. And to bring in $2 or $3 trillion into the market cap and get to the price to 150,000, I just don't think that is unrealistic at all. Very, very realistic. But let me show you this really quick. I'll go to screen share. All right. You should see my DXY chart now, right?
Yep.
Okay, so let me just talk about this really quickly. I touched on this on our last show. Right up here in September of 2022, we could see a major top in DXY. And I said this top took BTC from 15K, that was the bear market low, to where we don't know yet. We had a nice drop, some consolidation, and a nice lower high. This was the 25K bottom, another drop, consolidation, a lower high still, which this area between April and May helped form the 56K lows. And we can see right now, it's just stuck, right? And I know you don't follow DXY as closely as I do. During the bull markets, it's not nearly as relevant as it is during the bear markets. During the bear markets, a sneeze, a DXY sneeze of 1% or 2% can drop Bitcoin 10% easily. I've seen it happen 100 times. But in the bull markets, it doesn't matter. However, there are still some correlations to be watching. So what I am looking for to kind of get out of this 70K, 55K to 70K range is one more confirmed top in DXY. And it's struggling right now to get past 105. Maybe this is it. But we can see if I eliminated these, if I took these away, I could hide them. But we could see this is a bump and run breakout. This is perfect. We got, this looks like a shitcoin breaking out right here. Test, and then off we go. So this is, I kind of think DXY is going to trend up, which is perfectly fine. Bitcoin can move up with DXY. It's done it a million times in bull markets. However, it just moves quicker. It moves much quicker when DXY is trending down. So let's see if we can get some kind of a rejection here. If I zoom in, we can see the price is still pushing on that resistance. I think it's going to end up going higher at some point, but we'll see. So this is part of the reason that Bitcoin is struggling right now. It's that DXY hasn't given us any clear signals as to where it wants to go. It's just running around sideways. But let me show you the bullish scenario. I just found it today, actually. So remember, we've talked about EMA SMA relationship, right? Of the same denomination. We're getting a major bullish sign. However, before we do that, let's take a look at this really quick. On our last stream, the price was kind of, I have this cleaner. I think I have this drawn on 12-hour or maybe on daily. Yeah, daily. So when we were streaming the last time, the price was up here and we were both bullish. However, we both highlighted this 72, 71, 72K area and we're adamant about being able to push through there. And we can see these wicks are telling us it's not ready yet. So what I said, what I was looking for was a move up here and actually the price to drop back down into this triangle. I had this triangle drawn longer, and then below the triangle, and then maybe consolidate towards the apex of the triangle, because this is just how BTC operates. So we're still right in the middle of this range, now sitting below the prior all-time high. But let me turn this off and show you the cross I'm talking about. So I'm going to turn on the 50 EMA, which will be the lighter green, and the SMA, and I'm going to go to the 3-week chart. So this is all happening under the hood. All right. So if I zoom in, we will be able to see right here, the moving averages are indeed crossed. Now we need to make sure this cross confirms in 3 days. It should confirm on this weekly close. So let's go back in time and see what has happened when we've gotten this. We got to realize these are moving averages that are not easy to move around. You're talking about 50 periods on 3 weeks. These are actually 55. These are
Mark, why are you using 3 weeks? That is such a non-standard candle. Why is the 3 week your go-to here?
It's not. It's what I do. What I do almost every single week, Tone, is I just throw on my the combinations of moving averages, and I just look for something that we might not be seeing somewhere else. This happens to be one period where I see something taking place super relevant. And had this not been working for the past 4 or 5 years, I would abandon the idea. But I've just seen it play out over and over and over again. And so, but also you have to understand, the time frame doesn't matter. See, I believe every time frame is relevant. It depends on if you're using it to trade, if you're using it to analyze. That's completely different. Some people like Fibonacci likes to trade the 4-hour time frame, and I totally get that. But for analyzing and trying to figure out where we are in a trend, looking under the hood, and a lot of times, Tone, the strong information is taking a place way far away from where the price actually is. So here we got this signal, and check this out. This is where I find it to be very interesting. In January of 2017, the price was right at the prior all-time high, $1,200, and we get that cross. And we basically then at that point still took weeks to fully convincingly 1, 2, 3, 4, almost 5 more candles, 3-week candles, 15 weeks to firmly push above that all-time high. And now if we look back at 2020, right when we get the same cross, we will see that the price again was trending right at the prior all-time high at 20K. All this is telling us is that the momentum is picking up on this particular time frame. When you have the EMA trending above the SMA, even though we're stalling here, okay, it's a sign that this time frame is ready to go. It just needs a little bit more time. And so now I found this to be super interesting, actually, because here we are getting that cross signal again right next to the prior all-time high. So this is one of the reasons that I'm not mega concerned about what we're seeing. I don't see anything taking place that hasn't happened historically. And I'll put 2 moving averages on. I'll put the 21 and 13 EMAs, and we can look back here and we can see after that cross, it was basically this gray moving average, which is the 13 EMA, that held the price all the way up after the cross. We were basically done testing the yellow. And 2020 shows us the price ran way too far away. I'd have to put the 3 on here. There it is. We can see it running up to 3. That is mega bullish, which is why this didn't hold on the first test. It didn't hold because it hadn't been tested. So if we look, we're basically seeing the same thing that we saw in 2020. The price is climbing up the short term moving average, and has tested the orange one time, which is perfectly fine. As many times as that gets tested, the better, in my opinion. So 2017 suggests that we could see a drop all the way down to 55K and still maintain the bullish structure. Of course, it would be scary, and people will be calling for this to be a triple top or whatever. But this cross right here, to me, is telling me the same thing that we looked at on the 5-day. On the 5-day chart, when I put on the 200 moving averages, right? And it's like, well, why look at the 5-day? Well, because the 5-day, to me, is almost as relevant as the 4-day when looking at it in relationship to a weekly. But the 5-day got the signal with the price range is about the same. Here it is in 2016, and the price again was right around $800, still trying to get above the prior all-time high. And we got the cross again here in 2020 with the price at around 12,000. So this cross came when the price was at around 64,000. And now we're getting the moving averages diverging, getting more and more strength going. Now, if we had seen something like this in 2019, where this moving average was not able to cross above, I would be a little bit concerned. I would be looking at this as possibly an M top with a lower high and perhaps coming all the way back down there like we saw in COVID. Prior to COVID, we tried to get above these MAs to cross. It couldn't happen. They held one time and that was it. So replicating COVID, pre-COVID, we would see a nice strong bounce and a drop down to 35K and then a capitulation, which I just don't see happening. Um, especially when we're looking at the S&P, which if you remember the last time we were talking, I was looking at the S&P on the 2-week because there was a signal there that I felt was very relevant, which goes to the MRI. And maybe Tone, you can explain, go into a little bit of an explanation to people about this, because you kind of touched on it, but this is people actually being able to see it play out. So
Hey Mark, can you again like just get rid of the list of assets on the side? Yeah, thank you. So that like your charts are nice and big.
okay, so right here, when we were streaming the last time, the S&P was stuck right at this MRI. What do you call this, Tone?
I call it my acceleration line. It's uh again a lot of the elements part of the MRI come from Tom DeMark's TD sequential, which I used to trade religiously back in the day, but I traded it so differently than how Tom DeMark like suggested it should be traded that even though I have a lot of the similar lines, I treat them as completely differently. So that same line is generated in the Tom DeMark system and is treated as a stop loss line. But for me, it's not. What I've noticed is every time that line is breached, the market just accelerates higher. So I treat that line not as a stop loss. As a stop loss, that's way too dangerous because if I'm shorting the doji candle, these are weekly charts. What's your time frame here? 2-week charts? Right. If I am looking to short off the MRI top, if you put your cursor on the MRI top,
Right here?
right. If I'm
Yeah.
looking to short off of that candle, there's no way in hell I'm going to hold that short all the way into that line. That's insane.
Yeah.
So that's way too dangerous of a stop loss. And even if
Same,
I
same would be here.
shorted, yeah, same there, right? Like my stop loss is literally a smidge above the prior swing highs. So if I'm shorting off of that, off of the MRI candle, I'm taking the stop loss the moment that green candle happened after the MRI top, if you want to put your cursor on that. Or if you
After,
want to zoom in on the candles a bit.
there you go.
Right. So the moment that big green candle happens and it breaks the top of the MRI top candle, they're way behind, like 5 candles back.
Oh, back
Right.
here. Yeah.
Right. The moment this candle breaks the top of the prior candle, that's my stop loss. That's it. It's over, right? For Tom DeMark, the stop loss was the blue line.
Right.
For me, if we're crossing that blue line, we are so far ahead. I want to be in this trade before that blue line ever comes around. Before that blue line gets broken, I already want to be in the continuation trade to the upside. And that line allows me to double down on the trade when it's doing well. So if you go back another smidge, if you go back to the prior MRI top, right? That's a beautiful short of the S&P off the MRI top candle. And my stop loss is literally the top of that candle, exactly. Now,
Right.
this short trade works out super well. And when that short trade ends, for whatever reason, whether you take your profit, whether it hits your stop loss, by the time the green star candle comes around, I'm already back long into the S&P 500. By the time we're breaking the blue line, I want to double and triple down on my initial long because I am extra confident. And to me, I call that line the breakout line, the final breakout line. You can already have, like for me, the green star candle is already a bullish trade. And the break of a prior swing high is additional bullish trade. And then the break of that line is now a third bullish trade. Like if you have not gone long in the S&P 500 between the green star candle 3 candles ago, the break of the all-time high on the same candle, and you haven't already gone long on the S&P, it's almost too late. It's gonna have another pullback. It's almost too late to go long.
Well, and this is another thing that is making me not quite as concerned is we're seeing just no sign. It's kind of frustrating. It's kind of frustrating to see that the S&P and NASDAQ, if we look at NASDAQ, we get
Right,
the
like, and that's another frustrating thing. The S&P is crushing all-time highs, and Bitcoin is still stuck, significantly lower than the all-time highs, which happened 4 months ago.
right. But I just personally, I just still see it as post-halving consolidation. Everything needs to reset. The miners need to reset. They need to start accumulating, but it's harder for them to accumulate because they're producing less. And in fact, there's one thing we've not talked about. I'll show you on here that I'm waiting for. But just to show this really quick as well, NASDAQ is making the exact same move, accelerating above that area of resistance. We see the same thing here. So, Tone, your point is for sure um, well demonstrated here as far as how the MRI can show you these key areas. Um, whereas I think under the demarc these were called the risk lines, right? And it's just for me, what I learned is just an area to pay attention to. Now, one thing I will say is I've learned that after an MRI top, if you get like if the next 2 or 3 candles are bullish and poke above there, that can be a bull trap without a correction. We need a correction before. This had a nice correction, so no worries here. But let me show. I gotta find it. We don't talk about this much. Okay, so there's one thing I am looking for here is I'm waiting for a hash ribbon buy signal. Now, these by no means are anything to trade off of, except for they kind of can be. But if we look right now, we can see that the miners, so anytime the green, and I haven't messed with this. This is the standard one. I tried messing with moving averages, but this seems to work. Anyway, anytime the green hash ribbon crosses below the gray, you get this red area, which is kind of a sign of minor capitulation. It's hard to see here, but there's writing of capitulation. If I zoom in, well, no, the indicator doesn't show it. Anyway, so what you look for is for the miners to recover either by the price going down and then them being able to sell more Bitcoin or hold on. It doesn't matter. I don't care how it happens. At some point, these are going to cross up again, and then once they start diverging, the indicator will print a buy signal. So this next buy signal, I believe, is going to be epic. I believe that you need to take it very seriously, and it's the signal that could come to double the price very quickly. Now, if we just look,
Yeah, but more. That's a nasty red wave right there
yes,
on the indicator, and that thing is already gone wider than in all prior times. I mean, this thing can stay negative for another 9 months.
but here's a good one. This
Right,
was the
exactly.
yeah. Well, you are right. Like, and I'm not ruling out a scenario like this actually where the price is going to drop much lower than expected. I still think 60 to 64K is going to hold. But I do believe, I can show you this, I do believe that 65.5 is still very much in the cards, which is another thing that I'm not concerned about what's going on. It's the charts are very
Oh
clear.
wait, 65.5 can happen during our stream. That's
Yeah,
like half a
it might.
percent down.
But if we look now, one thing to understand with this indicator, this signal right here was failed. They're not all perfect. However, if we look here, this buy signal was printed when the price, this is December 2020, the price was 17,000. took it all the way to 65,000. This one printed right at around 40,000. And here's something that we can look at is it's very rare. Once the buy signal prints, it's very rare for the price to dip below the swing low of the daily high. But we can just look at this 4-day candle. So so this is, you can kind of trade off of this, because if it prints at 37,000, you're just assuming the lows are in, and you can put a stop loss just below there and wait and see, which would have kept you in. We had this nice run up here and then this drop, but it still would not have stopped you out unless you were trailing a stop and took the price all the way up here. Now, this one right here was pretty much a failed buy signal, because it printed in August at around 21,000 and did nothing. We actually saw a lower low, but this next one was printed at 16K. Well, let's just call it 18,000. Again, the price did not drop below the swing low of this buy signal, and we got a nice run. This last buy signal printed right at 25K, 26K, and it took what, from mid-August to October to play out. So we could still see the price drop. We could see the hash ribbons drop. They're going to cross up, and it takes, I don't know what the parameters are to get the buy signal to print. I thought it might be once the moving averages diverged a certain amount, but I don't think that's it. It might just be time. But when that happens, we could still see the price sideways for quite a while the momentum is building. But this next buy signal right here, I'm going to take seriously, and I think it's going to be effective. Now, let me show you why I'm looking at 65.5. So this is Consensio, except for I've removed most of the moving averages. This is the yellow is the 21 EMA. The black is the long-term 30 SMA. And I can go back throughout history, and I can say, very rarely can we say never or always, but I can say this. There has never been a time throughout history where the yellow moving average crossed below the black and the price didn't come down to test it. I can go all the way back. I can go all the way back to here in 2013, cross below, cross below, cross below. Now, this is where I believe we are. Somewhere in these two crosses in 2016 and 2017, right here. But even still, we had these nice highs, and we got that drop, and the price consolidated just below, but it didn't reverse the trend. This moving average, this cross can reverse the trend, 100%. This cross can call the top, which it basically did at 20K. It did after the 19K top, and it called this top, and it called this top. Like, it's a very serious cross to pay attention to. But because of the 3-week 50 moving averages, 55 moving averages I showed, and the 5-day 200s, suggesting to us, this is still the very early part of the uptrend, this cross is not worrying me. However, it is putting a very high probability on, at the very least, seeing a drop to 65.4 right here over the next couple candles, or on this stream, And as we see here, I'm kind of seeing a fractal develop similar to what we got right here in May.
Yeah, and I remember that time period. It was very, very frustrating,
Very,
but it looks like it's where we're headed. I just hope that second period is a lot shorter, that second drop, that big red candle down.
yeah,
If you go to the move to the right, yeah. I'm just hoping this red candle down is half the size, and then the amount of time spent below the black moving average is half as long. So if you cut the second half of the crash, everything from the red candle to the big green candle on the other side,
right there.
if you cut all that, if you cut the drop in half and you cut the time in half, that's what I think is more likely to happen.
Well, we could maybe get an idea if I put a date range on here. We are about 50 days after the halving. And I could basically another 45 days, 90 to 100 days. Let's just put it at 40 days. July, by July 23rd is when we would want the majority of this to be sorted out and for the price to think about starting to get bullish again. Maybe into the end of July. I could see that happening. But this looks very similar. We had a little bit of like two rounded tops and a double top. We've got a little bit of a rounded top here and a rounded top there. Then we had the low, which we have right here. And it's crazy. This basically was a double bottom, except this low right here came slightly, it was a higher low. If that had been a lower low, we might have been looking at a completely different structure. But I do think this is the low. I do think 56K is the low. But I would not be surprised to see the price somewhere down here before finally getting bullish. What do you think about that? What do you think about that, Tone? Are you trusting the structure or?
I'm finding this a little concerning.
Here's something
because
else.
there's two definitions to how to trust the structure. I'm trusting the structure to potentially drop the price to 40,000. I'm not necessarily trusting that structure to bounce the price at 65.
I agree. I 65 down to 64 should be strong support, but I'm also with you. I'm not fully convinced that it's going to be. But if you remember on our very first stream, I mentioned that this moving average was in play. And we can play always never again on this because there has never been a time in history where we saw a red candle close on the 2-month and the orange did not get tested within a few candles.
But where's the orange?
So the orange is at 48.5, but it will be trending. This is going to jump up at least into the low 50,000s.
Right. Now, apparently, Ugly Old Goat still has a $40,000 target for Bitcoin. I don't think 40,000 is going to happen.
I don't
But anything's possible. I think, and here's my problem. If you go to a lower level time frame, like say daily,
Yep.
and you put like some real moving averages on it, like 200 or something.
Yeah, I'll put. Let's see. This
Right.
is, the pink is the 128 right here. 128 SMA.
Right. Right. Oh, you're using okay, right. So say we go down slowly to the purple, which is going to keep rising, right? And that should be about 55, right?
Yeah, it's 50, 56, 57. So this is
Right.
so this
My
this
problem is no, that's fine. The difference between them is irrelevant. My problem is that if we go to 55, we make a double bottom, and I can't be bullish on a double bottom. So the last place I want to see Bitcoin is going below that MRI support line. That is basically as low as I want to see Bitcoin. The
right.
green dotted MRI support line is as low as I would want to see, is as low as I would want to see Bitcoin before I have to throw in the towel and wait for 30,000.
So that actually is kind of what I'm anticipating. However, if we look at this, so this is the 200 EMA above the 200 SMA. So that's bullish. We like that. That's good on daily. We want the EMA trending above. What's interesting, Tone, is going back at that fractal we looked at. So here is our low at 56.5. The purple moving average is actually a higher low, which is exactly how that other one played out. It looked like a double bottom, and it kind of was, but it was a higher low. So it would be even better to get the black moving average trending above that swing low. But to me, I had a conversation in your channel today with Nunya, whether he's seeing this gigantic structure as a massive inverted head and shoulders, and I kind of am. And it would allow for another drop down to that MRI. So we've got this area here
Right.
in April dropping, we got wicks below, but basically it was 61,000, which is exactly where this MR resistance is. We could get a drop right here, and this would target close to 85,000. Hold on a second. I got a bunch of crap on here. But if I took this move from here and just extended it out from this shoulder, yeah, it's actually a little bit higher. So I still think things are fine, particularly if the price is holding above, let's just call it 61,000. And it still remains within this gigantic channel. But one thing that is interesting just from these random drawings that I have is this trend line. I do have some concern because this trend line that the price is putting pressure on right here goes all the way back to October 2023.
And you already stretched this trend line beyond, like the way I would have drawn it, it's already broken, right? You've already stretched this trend line to be as accommodating to the bullish case as possible.
Yes, because
I would have
really,
drawn it even worse than that. I would have touched exactly. That's how I would have drawn it.
yeah,
And that's not good. And you also have this horizontal downward sloping channel that it's inside of.
yes.
And
So the
there
bottom of
is,
that channel is around 58,000 right now,
which is too low. It's too close to a double bottom.
which would still keep this in play. So one thing I wanted to show you really quickly. On the very first episode we did, I was talking about Fibonacci's and the importance of the 0.886 Fibonacci. And I think oftentimes we overlook the total market cap. We focus a lot on Bitcoin because it does lead the market. However, the last market top was perfectly called by a total market cap Fibonacci. But this is so clean right here. This cannot be any more clean. So the Fibonacci is drawn from the 2021 top down to the bear market low, and I've got the extensions going. And if we look right, it literally tagged the 886. And so we still, even though Bitcoin has seen a new all-time high, the total market cap has not. It has not breached this 886. And it's a perfect example of why this Fibonacci is so important when you are trying to dig yourself out of a bear market and print new all-time highs. Like you would think, basically, and here's another interesting thing too. Let me zoom this in. Here is the 0.618. So the market blasted through that, basically went straight to the 886, but they'd had to resolve this as support. So this has been tested one, two, three, four, five, six, seven-ish times. So we would like to see this hold, which is about $2 trillion, $2.1 trillion in the total market cap. However, there's no way to get fully bullish even on Bitcoin until the total market cap is trending above 2.7 trillion. Let's just call it $2.8 trillion. So this is something I've been watching. And if I do go back to the prior market, here is the Fibonacci. Let's see. If I put this here, we topped right at the 4.618. Almost exactly. In fact, if I move this up perfectly and put a horizontal ray at the 4.618, we'll see. No, this is why I had it. I liked it right here. You can fudge Fibonacci's right there. So this is another example where Fibonacci extensions coming from a prior market remain relevant, and it completely helped to top this, where we were all looking for Bitcoin to trend higher into the 80,000s. This 4.618 is pretty crazy, which is where I believe the Dow is. No, I think it's Nvidia has trended to there. So as much as we don't love the altcoins, I have come to I don't want to say change my mind, but I've realized that the smart traders in this atmosphere know exactly how to generate market cap for Bitcoin that wouldn't necessarily be there without successfully trading the altcoins. Most people are going to lose their ass trying to trade the altcoins, but the way that the market rolls is once Bitcoin makes a nice move, they will take some profit out of there and start speculating on other altcoins, and then that revenue rolls back into Bitcoin, and this whole wave continues basically until everything runs out of momentum, which I do think is another reason why we're seeing the price stall, is because the altcoins haven't done anything for the most part. There have been a few that have been successful, but there isn't that market cap growing coming in to help propel the Bitcoin price along. But I still just don't see anything happening in Bitcoin that's not unexpected, at least. And we can look at, I find this to be interesting. Some people do not agree with or believe in looking at Bitcoin dominance, and I just disagree. There's so much information in there, and from a structural standpoint, we can see. So I had a magnet drawn here once this was resolved. Once this swing high was resolved, I was fairly confident. Now this is total market cap minus the stable coins. It's going to read differently from the regular market cap. So we can see this swing low that was formed in 2020 is still relevant 4 years down the road. The Bitcoin just cannot, every single time the dominance gets up here, it's meaning that the price is rising fairly strongly or dropping very quickly. But this rise was mostly on the price going up. But as soon as it gets here, the altcoin traders get excited and they start aping into the alts, and then the dominance drops. And so once again, we are trying to make a move to push above 60%. And that is going to happen in one of two ways. And right now it's not looking good, but it's going to happen with the price of Bitcoin rising significantly or dropping fairly strongly. And then the next level to look above would be around 63%, I would say. And at that point, we might be in a range where I'm not yet convinced that the highs are in for dominance. I believe it's going higher. Do you have a strong opinion on that or not, Tone?
Oh, I think it's going way higher when you back out the stable coins. Yeah, absolutely.
Yeah. So the way to mitigate understanding what's going on with the stable coins is just to take a quick look at tether
But are
dominance.
you 100% sure that the general dominance is including stablecoins?
Yeah, I'm pretty sure. Yeah. So the regular dominance is reading 55.55 without the stable coins is 55.9. And if we look at tether dominance and USDC, it's adding up to about 6%. So
Okay.
that makes up the difference. Does that make sense?
Yeah.
So um so I was watching this
Yeah,
gigantic.
so I guess it's good. Like a lot of shitcoiners are looking at this kind of dominance and they're happy. They think the shitcoins are rising, but they don't realize that it's the stable coins that are getting all of the action, and their actual real shitcoins are just getting destroyed by Bitcoin. And I see that in the charts. I go through each shitcoin versus Bitcoin, and there's only two that are performing. I mean, Ethereum's been very slowly declining for like 6 years. And the only one that's performing positively is Solana. And even BNB, I think, is tapped out. And I think BNB is heading down.
I agree. And now one thing we have to be careful with here though is this is tether dominance, which is basically the strongest stablecoin. And right here in November, I was watching this massive triangle and I had a breakdown perfect. So I was looking for this to break down right into the halving, which is exactly what happened. But now we can see since the halving, which is one of the reasons we're seeing the price of Bitcoin kind of uh, stagnate, is because tether dominance hit a low and has now printed a higher low, and it's stuck at this horizontal. I've had this horizontal drawn. I haven't looked in this in a couple of weeks, but this is so it's moving above here is going to push the price of Bitcoin lower. And then if the dominance begins to take off even stronger, we are going to see Bitcoin drop. But this is still unresolved. We're not sure what is going on. That being said, something did happen on dominance that got me very bullish on the tether dominance. I think it was a 2-month chart. Um, and if I put, let me see, maybe it wasn't the two, maybe it was. Yeah, okay. So if we look here, we've never seen, ever since Tether has been a tool, we can see that the yellow 21 on this 2-month chart has been support countless times. Well, not countless times, 5 times. Um, and right here, for the very first time, we got a close below. That's a massive change of behavior. This also keeps me very bullish on Bitcoin, especially if this orange moving average crosses below. Um, then we will see Tether pushed down below 3.5%, maybe even to these lows right here. But it's not resolved. Now, the monthly, here's another thing that's bullish is the monthly got a significant moving average cross that was tested right here in February and rejected. So this is still keeping tether dominance down. And as long as this is trending, I would say below 5.75, Bitcoin's going to consolidate and eventually this will roll around, hopefully, and break down. I believe I did. So we had kind of a parabola type of a pattern here, and it's not quite broken, but it did get a lot of pressure on it. What I want to see is for Tether to push down below this, basically below this low at 3.8, and things should be set.
All right, Mark, let's jump on to any other topics. You know what we actually haven't done? I was gonna grab screen share and just quickly go through some on-chain analysis charts. Something the last time I looked at them was back in April.
Okay,
Do you want to cover some traditional markets, maybe Nvidia, maybe Tesla, maybe some
sure.
effects? Anything you want to talk about the Powell speech from yesterday? Anything you want to cover for the next maybe 5-10 minutes? And then I'm gonna go through the some on-chain stuff. Maybe we will incorporate on-chain every week or at least every month with this show.
So one thing that I've noticed, and I don't know how or why this happens, but the last two or three meetings, Powell meetings, the price has dropped the day before the meeting, no matter what the news might be. And then the meeting happens, and no matter what the news might be, it basically bounces back into that range. So it seems to be like a play that the bots or the algorithms or something are making. I don't know, but basically the news yesterday was pretty much nothing and what I expected to happen. We can't. I don't think that rates can be cut with inflation still sitting where it is, and but there are some signs, Tone, to be looking at. I have this one interesting look at unemployment. Where is this? Okay, so if I put this on like a 3 month chart, I've gone through here and I've highlighted every single recession that I could find. Um, and there have been recessions that have taken place with unemployment, of course, much lower than 4%. But one thing that we need to be watching out for is unemployment is pushing on 4%. And that has triggered, it's very hard to keep it below 4% once it has pushed through it. And I believe Powell said something like they're looking at 4.1 or 4.2%. Okay, fine. But we can see that this is getting, and of course I wrote this time will be different, but it's not going to be different because as soon as this unemployment starts rising above 4%, that is probably when they will start to try to ease. But I do think that they probably won't consider it until around 4.2%.
Right. So they're actually hoping that high unemployment brings down inflation. So they need to see a high unemployment tick, but they need to see the high unemployment tick leading inflation down. And inflation could be coming down if, people don't have the money to buy shit. Dude, things are getting expensive. I just looked at my freaking bills. I'm like, man, I gotta start spending less money.
So, so Tone, um, one thing, I have a theory. I could be completely wrong on this. I have a theory we're going to see inflation significantly higher, significantly. And I'll show you why I believe this.
Which is a
So,
huge problem, right? High unemployment and high inflation is a recipe for a government overthrow.
yes, and as long as this continues to trend down, it's fine. But here's the pattern that I've noticed. This goes back to 1915. So I have a trend line highlighting one, two, three, four major spikes in inflation throughout history. But if we look at each one of those highlights, there was an initial spike prior to that, and then a higher high. And it's usually about 4 years in between,
Oh,
right?
interesting.
So we're not, there's nothing, basically, this dip is completely expected and normal. Um, but here we go in 1942, we spiked at 12 and a half, dropped to 1%, and then ran back up again. And then this other major spike in the 80s, 1980, the actual inflation spike the initial one came in the mid 70s, but we actually saw higher inflation in 1980. Now, I was watching this so closely because this trend line, I have this drawn as conservatively as I can, and it was broken. And you can see I had this arrow
Right.
drawn up
So
here.
here's my opinion on this. Is that I think the next spike in inflation, which I do agree with you, we can get a nice spike in inflation, but I don't believe it's going higher than the last spike. I think the difference between this spike in inflation and the prior two is that this one was, again, completely non-free market driven. This spike in inflation was deliberately created by the unnecessary COVID lockdown. So had the free market been allowed to resolve the 2020 COVID, I'm not a COVID denier. I am just angry at the response to COVID. So everything got blown out of the water. So had there been a natural response to COVID where your side arrow is, that initial bump, the black side arrow, that is probably where the inflation would have peaked had it not been for the government lockdowns. And we're not going to get into my conspiracy theory as to the reason for the lockdowns. But and then we would now be working on a secondary inflation spike as a that would have hit your line. But because we hit your line due to government's bad management, I think the following spike would be lower than the spike of 2020, but it would have been higher had the governments not, played, worse than Soviet Russia ever did.
So, it's interesting because this is why I like doing these streams with you, Tony. There's a very specific reason I have that arrow drawn there, and you picked up on it, is that maybe this was the first spike, and this was the reactionary spike, and you are right. Maybe now, and also I have this mean. I don't know if the government considers this. Well, basically it's just 2%. Of course, this is where the government is always saying they want inflation to ride, and we can see that is a pretty good mean. So as long as inflation is trending down and the unemployment is holding around 4%, and it's kind of sad in our country that you need people unemployed to control inflation, but it's true. If that inflation is dropping, we are going to see the inflation rate turn around again. So why would they cut rates right now when you have everything happening as it needs to be happening?
They wouldn't.
They wouldn't. They wouldn't, right?
They wouldn't.
So still people think that we might see a rate hike in September just based
Oh,
on,
you mean cut? You mean cut, not hike?
sorry, cut. Um,
I
instead.
believe we will see a rate cut in September. That was my bet with Joe Carlosari. I believe a rate cut is coming in September because I think Powell would rather have the incompetent Biden administration in power than potentially more competent Trump administration in power. And he may be more interested in getting Democrats reelected. And also, since everyone is on his ass about cutting rates, and he's been promising to cut rates, it's better for his, reputation if he at least cut rates, because cutting them by 25 basis points is irrelevant.
Right.
But at least it gets, the trolls off his back.
Right. I kind of agree with you. I would be surprised to not see one, but I also would not be surprised if there was one. There shouldn't be one, in my opinion.
No, there shouldn't be one, but he can claim that the economy is doing really well, and well, sort of the other way, right? Usually when they drop, the economy is doing badly, right? So he
Right.
can still claim, look, the economy is doing really, really well, and we do want to help the average consumer that's trying to buy a home. You
Right.
know, they
Yes.
kind of ignore the fact that the retirement saver wants a higher interest rate, but who gives a shit about people that are going to die soon? That's basically the government's perspective, right?
So now let me ask you this, Tone. we are we are getting some early warning signs of recessionary environment, but we're just not there. I mean, the thing that I look for is for the employment rate to run above for 4% for the U.S. the 2 year to top. That's a major signal to look for the 2 year to top, and we're not really seeing that. This is doing the same thing as Bitcoin is doing, and it's basically just lingering at the highs. In fact, we talked about this the last time. It might we could argue that this is an ascending triangle and it's going to go higher right here. So there's no, and we're looking at the stock market at a new all-time high. Like there's no reason to be calling doom and gloom, but everything is teetering right now. I think it's going to be very difficult to get through 2025 and 2026 without some kind of major market event. But I don't think that will be the top. And
All
did
right,
you know?
let
Did
me
you?
know because like we are limited on time, right?
Yeah.
We've gone about an hour.
Okay. Did you notice? It seems to have gotten fixed because I was getting super concerned.
Oh
Some
no, didn't I write in our group that's a data spike. That's a data error spike. It was obvious that it was.
Okay, so whatever happened, it completely like destroyed all of my drawings that I had on Nvidia
Yeah,
because
no, Mark, that was I think I commented on my channel like that day that you posted the chart. It was obviously a data error. It was just like the Berkshire Hathaway dropping 98%. It was a
okay,
data error.
okay. So
It
this is
was a it was a bad, I mean, it was when you get a data error, you don't know where the data error is coming from. It could be the front end of TradingView. It could be the back end of TradingView. It could also be uh, the back end of data provider to TradingView. And in this case, it was likely the data provider of TradingView, like the data from the exchange, where someone might have accidentally, for a split second, adjusted the price of Nvidia as a 10x reverse split versus a 10x split, right? And it has that data spike, and there was no trade at that price. Like it's and even if there was a trade at that price, if someone bought one share of Nvidia at that price, it's really irrelevant to the overall picture of the TA.
got it. Well, I'm at this point convinced that this is absolutely in a hyperwave. I believe it's in a monthly hyperwave, and there's no sense in even trying to call a top. There's nowhere near a top, but what happens with these is they drop 85%. Um, so so run with it. Like as Tyler Jenks used to say, the trend is your friend until the end of the trend. There's nothing that looks like a top on this right now. But I did find this interesting. Um, when I go back on log scale and put on the fibs, this just shows you how insane this run is. This is this is topping beyond the 4.618 fib taken from the
And
20.
Mark, put a monthly chart on and put the MRI on. I think this ends next month.
All right, well, if it does, we'll take a look at something interesting. Oh yeah.
I would be looking to, I mean, look at the last two times we got a monthly MRI top.
Yeah. So let me show you something really quick, Tone.
I would be looking to, I mean, I never took advantage of Nvidia long in this whole run up, but I may short the shit out of it next month.
Um, all right, I just wanted to show. So this is Nvidia. This is how I have it kind of drawn out on a monthly. This is a monthly chart. Tyler used to do them on weekly closes, but get back. This thing is so massive. So until this purple line is broken, this thing is still going to go. And because it is on monthly, who knows? We could go to another monthly. But I did draw up a few examples to show what happens when these parabolas run out. And this is what we learned from Tyler Jenks. So here's Nvidia I mean, sorry, NASDAQ, uh, from 2000, 83% correction top to bottom, losing. What I've learned, Tone. I remember I talked about the 4.5 phase line. Like
Right.
there's that
Yeah, but
five
Mark,
two.
I'm not looking for an 80% correction in Nvidia, right? Like, I'm just
That
looking for a 10% correction in Nvidia, and if I can time it with a monthly and a weekly MRI tops, the weekly MRI top is coming in 2 weeks. Like, as the month is rolling over, like, I would have loved to see the weekly top towards the end of next month, not in the beginning of next month, and watch it run up to like 150, 160. However, there's a weekly MRI top coming, and the weekly MRI top is gonna happen in the last week of June. And man, if the daily, weekly, and monthly all line up, shit. I'm gonna buy.
exactly.
I'm gonna buy puts.
Well, Tone, this could. I'm not calling for 85% either. What I'm saying is that I believe this is in a hyperwave. I do believe it can trend much higher. It could drop all the way down to, at this point, like, I guess it'll be $100, or I believe it's 10 to 1, and still maintain this trend line. But I do I do think that when this ends, the money is going to leave Nvidia. As I know, there's an AI um, component around it, and people are super bullish about it. But I mean, this just looks so textbook to me. I kind of ran it by Socrates, and he kind of agrees. So I agree with you. Like, we're not looking for a top, but I'm just showing 85 to 90% is very common, and we don't want to look at this either because I believe this S&P is also in a hyperwave.
So,
But
right. So that's the thing, right? The S&P Hyperwave is not that serious.
no, not yet.
And this is my issue a little bit with Hyperwave, where we're trying to apply Hyperwave to an individual asset inside a market that is not at that level. And I think that has led some people to uh, not properly mark the tops of some of these assets within the general trend of not being the trend. You know what I mean?
Yeah, I do. Well, and also typically what we do see is a blow off top or some kind of massive high, and then a good correction, and then a bonus bounce. And you don't get concerned until the bonus bounce, really,
Right. All right,
right?
Mark. We have to either end the stream now, or I gotta. If we're gonna do on chain, we should have started like 15 minutes ago.
Okay,
Where
go
the
for it.
stream is going way too long.
Go for it, Tone. Here's
All right.
before you go, here's another look at possibly us being in this triangular consolidation from 2015, sitting right along this long-term trend line. So until we're like breaking stuff way down here, I think we're good. All right, go ahead.
All right. I'm gonna take over screen share here. Also, I am looking at. I may mean to take time off, like literally time off, to work on trading bots. Just I want to code. Like, now that there's better tools to code stuff, I'm actually might be coding uh, a strategy around those acceleration lines, because I see it way too common. Every time it crosses, at worst, it's a break-even trade. It's almost never a reversal trade unless you're in a situation where it clashes with another part of the MRI. So you break the line with a reversal MRI. So that's the only time it would negate. But I just reviewed all these charts, and there could definitely be to both sides, the short side, um, and the long side. What asset am I looking at? This is a very shitty stock.
It's Neo.
Breakout here, and that was the last breakout. This one didn't close above it, so you see the line keeps going. It does need to close above it. And when it does, it accelerates down. It's just random stocks. Okay, so I'm not going to talk about the price of Bitcoin. You guys can watch me every single morning. So I like looking to Bitcoin. They have a lot of charts. I'm just going to go through. They have way too many to go through all of them. But as we look at them, if I see something interesting, I will comment. Mark, if you see something interesting, tell me to stop. Okay, and I'm not going to name them all because, like I said, it's too many. But we can kind of just go through all of them real quick. If we see something interesting, we'll comment on it. This is the stock to flow model, which always get. I don't like this because to me it's always wrong, and the reason it's always wrong is because it's always reevaluated and redrawn. But it always looks right, which is why I don't really care for the stock to flow model.
Well,
Your thoughts on it?
yeah, one thing interesting though is that it is kind of helping to prove my theory is that if you look, it's printed like one or two red dots after the dark purple or whatever. So from a timing standpoint, it's still very early in the timing of the run. Getting those early red dots. We're not even anywhere near orange or yellow or green.
Right.
And even 2020, that was a stunted, let's call it a stunted cycle, it still got into the yellow, at least. It would just
Well,
be
okay, no, but I think you might be misreading them a little bit. The color is timed to the halving.
right, right. I
It's
understand.
time. It's days till next halving. So it's
Or right, right. Or days past the current halving. I'm not sure how he
right,
had, but
right. Either way, right. So yeah, the red dots were obviously we broke to new all-time highs prior to the halving, so it'll look better than it is. But anyway, I don't want to spend time on the stock to flow model. Clearly, this whatever the fear and greed index is, it's showing that we're at a top, not a bottom. So that's not good. The pi cycle marks where the tops are, not the bottom. So we're nowhere near a top according to the pi cycle indicator, which is good. It's good
actually
news to
go back to
see.
that one. Go back to that one real quick, Tom. So again, if you look back at 2016 and 2017, just look how long the price based off of the lower moving average. And that's right where it is right now. In
Right.
fact, the longer it spends on that lower moving average, the better the chance that it's going to tag the higher moving average and get above it.
Interesting. Nice. This is the golden ratio. This is probably Fibonacci moving averages, is my guess. They do explain these things. Yeah, they are Fibonacci moving averages. And this is what, Mark, you like to use. And we're looking clean here. We're looking pretty good. We're right at the green. Usually goes above the red. We haven't been above the red at all in the cycle, so this looks good. Bitcoin profitable days. Well, I don't think this really is a market timing mechanism, so we can skip it. I really don't like these rainbow charts. I think they're always, just like with stock to flow, I think they're always look correct because they've always redrawn. So I'm not a fan. Bitcoin Cycle Master, I'm not familiar with this. But it looks like we're clean here. Still need to get back to that red, which currently sits at 150.
Yep. Where's the yellow one sitting?
The yellow one, 93.
Okay. I think the yellow might be where we would look, unless we break diminishing returns.
This is global liquidity M2 versus the price of Bitcoin. And I'm not really sure what the conclusion from here is, so I'm not going to comment. Long-term hodlers realized price. Looks like the hodlers are not selling, they're hodling, which is good. The price needs to pop, and then they're going to start realizing that price gain. So we're still okay.
Yeah.
We are still okay here. Same thing, but short term, not many conclusions can be reached here. We're looking at pi cycle top, and bottom indicator. This is getting a little bit lofty, but every time it's been in this vicinity, the significant highs were about to be made. So it looks like we're good. I do like these address charts. This is Bitcoin active addresses. Very surprised that it's dropped like that.
Yeah. Don't know what it could be.
That tends to happen in bear markets.
Yeah. That one is definitely interesting.
I mean, 7 days is not really a significant look back. I would rather have this be at 30 days, not 7.
Active.
Not a big fan of 7 here, but this is concerning. I don't know how concerning, but not ideal. Nope, not useful. Let me close this.
Is there anything with the miners holding or selling in on this site?
Maybe. Yeah, there are some minor stats. We'll get to it in a second. This is Bitcoin addresses with a balance greater than 1 Bitcoin. We can see how it has been dropping. Oh, crap. How do I... That's better. The peak was in January. We've been dropping. That's unfortunate. I wanted to see this cross 1 million. That was one of my metrics for the big bull market, but I didn't expect this to start going down. So this tells me a very important thing, and this is something I speculated in the beginning of the show. Middle class, borderline wealthy people are not interested in accumulating a Bitcoin. They're just not. And it looks like these same middle class people that have accumulated 1 Bitcoin are breaking into that Bitcoin because they're tired of waiting.
Well,
I want to see this number scale back up, but it will be very, very challenging. Like if we look at greater than 10 Bitcoin, that managed to somehow also peak right before 24. That's surprising to me as well. Look at the 100 Bitcoin number. I'm sure it peaked in like 2017 or something. Yep, there it is. It peaked even before the bull market, right? So at this point, it becomes too expensive for anyone to accumulate 100 Bitcoin in a single address. And the only place for this to go is down. So even though the price would reach a new high, the days of anyone accumulating 100 Bitcoin are done. Like, I can't accumulate 100 Bitcoin. You can't accumulate 100 Bitcoin, right? Like unless I somehow go Joe Rogan viral with 5 million followers paying me for my services, it's impossible for me to accumulate 100 Bitcoin, okay? So that's it, right? The days of the average middle-class person accumulating 100 Bitcoin are behind us. And the days of us accumulating 10 Bitcoin is behind us. Like, I don't know, maybe at the moment you and I can still pull off accumulating 10 Bitcoin, right? Maybe that's possible, right? You get a nice, nice trade, you get a nice win towards your, like I don't know, you're a saxophone player, right? Like what do you call it? Like I'm not a music person, right? But what's the #1 orchestra in the world, right? Like they might hire you, right? And suddenly you can accumulate 10 Bitcoin, right? But they're not going to pay you enough to accumulate 100 Bitcoin.
No.
Right.
No. I talk to Ken about this sometimes. We we look at actually what level of millionaires are starting to get priced out of Bitcoin. And you're
Right.
talking about, you might have someone who's worth $5 million, and they might have maybe 20% of that liquid, and of that 20%, how much are they willing to risk? And so even those
Right.
people are getting priced out of
Right.
10
So
Bitcoin.
I was hoping that greater than one Bitcoin number would actually continue to go up a little bit more. I felt that back here, when Bitcoin is trading at $15,000, $20,000, and I kept saying it, guys, if you can accumulate one Bitcoin, you can accumulate two Bitcoin, right? Addresses with over one Bitcoin, you can accumulate two Bitcoin. That's starting to get priced out. So it's possible that the one Bitcoin addresses have peaked. And if the price spikes to a quarter mil, that's it. So these are not ideal metrics. We now will have to look at 0.1 Bitcoin. And look at 0.1 Bitcoin
Is kind of rising.
is rising, heading to a new swing high, right? But these are not the 0.1 Bitcoin people are not going to drive Bitcoin to a quarter mil, okay? They're just not enough of them, okay? It's you need those one Bitcoin people for the moment still. But when Bitcoin is a quarter mil, then the 0.1 people will drive it higher. So anyway, and addresses with 1,000 Bitcoin, I'm sure they peaked. Oh wow, look at that. Look at that. They peaked way later than the 100. That's interesting. This is institutional. That's institutional, right?
Uh,
Addresses with 1,000 Bitcoin actually peaked after the pandemic, right before the pandemic. Sorry,
yeah,
no, after the pandemic, a
after
year after the
at
pandemic.
that 65K top, or
Yeah,
getting into that.
yeah. But we
Uh,
can see how this thing peaks before the drops. And I don't like the fact that the one Bitcoin hodlers have been selling for the last 2 months. Not ideal. Not
some of
ideal. All right, let's move
some
on.
of that some of that could be, there are so many hardware wallet options now, and so many different ways to kind of uh, spread things out. Some of it could be that. Some of it could be people taking some Bitcoin and putting it into IRAs and taking advantage of these ETFs. Some of that, not all of it, but um, I do think some of that is probably taking place as people are moving it around into more traditional.
All right. I think going through these charts would need a standalone show. I only have 5 more minutes. And the David Poole multiple, and David Poole is not even using it anymore. He doesn't see it as valid anymore, but people still use it. So I will say it's actually in a decent place right now. And the what the hell does that stand for again? I'm drawing a blank. Oh yeah, market value uh, versus realized value. Um, uh, Not too bad. Still got
Yeah,
room to go higher.
go back to that one real quick, Tone. That one is nowhere near any of the
Right.
spikes highs. Nowhere near.
There's a couple of these charts that I really, really liked. I want to get to those. Uh, yeah, we're okay on this indicator as well. Net unrealized profit loss and realized HODL ratio is still, okay. I mean, we got room on a lot of these. Advanced NVT is on the high side. It's definitely on the high side here. Uh, Realized price. We're looking okay. A little toppy. Not great. Uh, this is okay, whatever this is. Cumulative value coin days destroyed. Uh, it's looking okay, a little toppy. Would be nice to get, a little pullback, but again, these things are dangerous. Top cap. This is a top indicator. This is Willy Woo's, I think. And this is why Willie was very, very bullish in the last bull market. So if we're lucky, we're going to hit it this bull market. It's currently sitting at like 360,000. I think this is Willie Woo. Maybe not. I thought it was. Huh. Okay.
There was an interesting graph that I saw on Twitter today that showed the distribution of the 21 million Bitcoin, and it's saying here 57% individual holders, 17.6% lost, and Satoshi's owning 5.2 million. The rest are corporations, ETFs, governments yet to be mined, and what the miners are holding. But I found it really interesting that it was the holders, the lost coins, and Satoshi are making up 80% of the Bitcoin out there. That there's still so much Bitcoin, even if those one Bitcoin addresses are dropping, there's still so much Bitcoin being held, helping to increase the value.
You're talking about this right here. It just took me a minute to like
That's it,
put
yeah.
it all
Is that on
together.
there,
But yeah.
or did you see that? That's not on the
Um,
website, right?
I saw it in one of my group chats and I just went
Okay.
there and grabbed it.
Yeah, I thought that was interesting. So 80% individual lost in Satoshi wallet.
Yeah, I think this is a little high.
It sounded high, but there are what, 5 million lost? Yeah,
I think
that
this
is
is
high.
also a little high. And
Uh,
the amount that miners are holding is unreasonably low.
Perhaps I have seen that the miners have
No, no,
drained.
no. I'm not saying it's a bad number. I'm just saying it's unfortunate number. I believe the number. It's
Oh,
just a
I got
low
it.
number.
Yes. But Tone, think about this. They sold, when have they ever had a chance to sell at the halving with the price at the all-time high? They've
That's
never
true.
they've never had that opportunity.
That is true.
So that is not that's not alarming to me. In fact, I think it's bullish because it means they're going to be able to hold less to sell onto the market, um, as the price rises over time. Um, I think it's actually bullish that they're holding very little right now. And it reduces sell pressure on the market in general.
So I like this chart right here, terminal price. It did call the top nicely in the last cycle, and right now it's calling for 150. Right
That's what
now,
I'm
and
looking
once we
for.
go up, it'll go higher. So this one is one of my well, one of the ones I like better.
Yeah, that still kind of remains my target price area for highs. Just need 2 trillion to reach that 100K. You keep pulling these charts up and it's got that 100K line. It's just $2 trillion in the market cap. That's it. When you have Nvidia and Microsoft and Apple all occupying $3 trillion of market cap, to expect Bitcoin to only have two, I think that's very, very reasonable.
Ooh, spent output profit ratio. That's a massive spike. Interesting. But we can't read too much into it. It's not really a predictive metric. Value days destroyed.
Don't know what that is.
I know, but I don't like it as a structure. Is it is indicating a bit of a top here. I mean, they do explain them. Identify the price of Bitcoin may be becoming frothy and close to topping out. Uses the principle of coin days destroyed. So they do explain what this metric is. But we can see it that soon after these spikes, I mean, the top is near.
Yeah, except for that double top, that massive double top in 2014, that or that double parabola move.
That.
Yeah.
Yeah, but remember, there was an
But
80%
also,
correction in between.
okay, but Tone, look at 2018, look at 2017. You had that one spike where the
Right
price was
here.
probably, yeah, but the spike before that, the one before that,
This one.
yeah, well, the price was at $1,800. And so what if
No,
six,
a
what,
little higher now. That was 3,000.
okay, 3,000. So and then there was a secondary spike and a third spike.
Yeah.
Uh, so we are getting the first orange spike at 70K. And that first orange spike came in 2020 at like 14,000, it looks
Look,
like.
either way, we got room for more upside, but there wasn't, I mean, there's still about, 100% worth of upside left.
Yeah,
But from a timing perspective, not a lot of time left, right?
possibly.
But something to keep in mind, hodl waves this is a very popular chart. And we are seeing the spikes in these lower bands, but we're not seeing that much of a spike in this yellow band, and that's the one I'm really looking for. I'm looking more of a spike in this area here,
Is
and
that
that's
like
not
one
happening,
to
which is
two?
good.
Is that 1 to 2 years?
Yeah, so that's 1 to 3 years.
Okay. Okay.
This is starting to get concerning as well. Now, there are some metrics that are calling for some tops here. This is not, I mean, I'm still going to say it's 75-25 favoring the bullish case, but some of these on-chain metrics are, it could be, that crazy summer of 21 all over again.
Yeah. I don't see it as that yet, but I just, the very first stream we did, I said I would not be surprised if price wasn't at a new all-time high until September, October, November of this year. Because that's what the high time frame TA was telling me. So far, I'm just not seeing anything that's like super alarming to me.
All right, and finally, we're going to just do some minor stats, and that's it. Oh, we already did that one. Bitcoin hash rate taking a bit of a hit. I think
Yeah,
right now it's crunch time, man. I think miners are running out of Bitcoin to sell, and they're gonna get in trouble if the price doesn't go up soon.
yep.
I think
Well,
miners are gonna start shutting down in 2 months if the price is below 70.
yeah, you kind of need that, unfortunately. But I still think a lot of miners sold very smartly into the all-time high, into 70K, and probably have money on the sidelines to weather the storms.
Hey, Mark, these two lines don't cross very often, and when they do, bad shit happens.
Yeah. Um, that's oh yeah, that's a hash ribbons.
Yeah.
Um, that yeah. So that's was that on, let me see, let me look at that. Um, yeah, well, we looked at the hash ribbon indicator earlier, and it clearly shows that there is a bit of a minor capitulation already taking place in the hash power. But the hash power is so high that a cooling off of that is kind of necessary. So is this okay? That's minor revenue. Is there something that shows how much the miners are holding?
I don't think so.
Yeah, I saw that somewhere, and it was a very, very low amount. They basically are sold out.
All right, on this note, we got to get going. I got to get going.
All right, those are
Uh,
interesting to look at.
Let me see where the price of Bitcoin is at. I don't like it, man. This is a double bottom. We were not supposed to come this low.
Going
Right
65.
here, uh, we need to be above 68.5 right now. And for every second we spend near yesterday's swing lows or 2 days ago swing lows, the more likely we are to crash down.
Yeah, you have to trust that signal that I showed on 4-day. I mean, I just feel pretty strongly that it's going to 65.5. And I was throwing up a warning about that when the price was still at around 71 or 72,000. It just hadn't gotten fully developed yet, but it's pretty much there now, which is fine. 65.5. It's a good buy. Actually, 64 to 65.5 from a long-term buying standpoint, it's not financial advice, is a good little
Yeah,
hodl area
yeah,
to
I
be
just
looking
don't
for.
see how Bitcoin can avoid the 128-day moving average at this point. But if we can get an MRI buy reversal, if we can replicate
Yeah,
this weekend, I would be happy.
possible. Yeah, it's very possible. It's very possible to get an MRI buy on the daily coming up.
I'd be a buyer. Give me a reversal candle. I mean, just give me this candle right here. Give me this candle replicated. What's today? Today's Thursday? Friday, Saturday, Sunday. Replicate this candle on Sunday or Monday, and I'm in.
Me too. I'm with you. I totally agree.
All right, I'll be ready with my buy the dip shirt.
All
All right, man.
right, Tone. Good.
Thanks for watching, guys. And I will see you all tomorrow morning with Matt McGregor on channel right here. Please like, subscribe, check out our Maldives event, and hopefully see you there. Bye, guys.